Traders, somebody's just asked me my opinion on the AUDUSD pair. Let's just go out of here and we'll do a quick top down and give you my take on this. This is a really difficult trade. All right, not for the faint-hearted, guys. Look at this ranging market on the daily time frame, right? There's no trend. This is trending, and that's where I really love to get involved. But this, look at it, right? How do you get involved with this? Okay, so what we're going to do is cover that in this video. How to get involved in a sideways ranging market. Not for the faint-hearted, not recommended, but people do love to trade these ranges. So here's the thing. You know, the first thing that I want to do with this is just work my way down the time frames and map out the potential target areas, you know, like if this is going to buy or sell. Where is the draw on liquidity? So first up, I'll have a look at this low over here. And I mean, telltale signs at the moment on this chart to me are, yeah, I mean, look, we've got these wicks here. So this has been under pressure in the last 3 days. You can see the doji candles, right? But the long wicks above are indicating that this is potentially bearish under pressure. And so this could be the target down in here, possibly, right? Okay, so keep in mind that that could short. Can head in either direction, but this is telling me that a sell would probably be the thing, possibly. And the other thing that I'm seeing here as well is we've got relative equal highs here, bit of a double top, and this spike up, okay, that's hitting the liquidity that's resting above these levels here. So is big money gearing up to head south? Don't know at this point. But when you see the market ranging like this, absolutely 100% big money are working their orders, you know, but we don't know which way they want to head at the moment. The only thing that I would really do with this, I mean, look at that. That doesn't really tell me much. And, you know, if you're an experienced trader and you can see something in this that I'm not seeing, please comment below. That would be awesome. But how I would trade this would be like this. I go down to a lower time frame. I'd be looking for a scalp, potential day trade, but a scalp more than anything. You know, it's not a trend. The bias is kind of up and down. It's sideways. You know, they're working their orders in there. Yeah, look, the other thing you can do, and I pulled them into the chart earlier on, is we can open this up into a 3-chart layout. I was looking at this actually today. And you can see I've made a couple of decisions here based on, well, I've been analyzing this, but this is the US dollar index on the right. And on the left over here is the Australian currency index. What I'm getting from both of these charts is that there's more strength in the US dollar index has pulled back, and I'm thinking that this high over here is a liquidity target. They've already taken out these stops that are resting up in here with a vengeance. All right, so now we don't know whether what they're trading into here is enough to roll this over. We don't know whether it's, you know, the liquidity they've hit here will force this to trade south. Now, the thing is, it's Friday today. And what you generally see on Friday is the markets trade in the opposite direction that they've been trading in. So there's a possibility we see the US dollar drop, or it could look to hit this level before it does. This is a big level, and I'm thinking that it does rotate somewhere around here. Okay, but strong dollar, coming to the end of the week, it's not an ideal environment for trading, but you know, we'll go ahead with the video. Strong dollar, and the thing that I'm seeing with the Australian, the Aussie index here is this. Look, we're ranging, and anytime you see a ranging market, we know that big money is working their orders, okay? And I've pointed out these wicks under here. There's liquidity being generated above and below the range. When you see these wicks pushing down like this into this pool, liquidity pool, it tells me that they're possibly accumulating, and you know, they're taking out these sell stops under here, and this is potentially going to push up. Okay, so you know, both of these are showing strength, definitely, and both of these have a target that could be reached, or you know, they could be reaching for. So both bullish, in my opinion. All right, not an easy gig, guys. And then when you come back over here, this ranging market, you can see clearly, right, that it's not trending in any direction other than sideways. So how to get involved with that? I'm going to go down now to a lower time frame and look for, just click this one up the top here, and I'm going to look for an opportunity today. And you know, how do you get involved with this? Well, one thing, I know that a lot of traders will be speculating, given that we have this range, and it's now trading at the base of the range, more or less, right here. So they're thinking, okay, it's going to do more of that, right? So you're going to find that traders in here will most likely be looking to buy to hit the top of the range. Okay, that's one idea. So let's just look at that. Fair enough. We'll go down the time frames. In fact, let's go to a 15-minute chart, and I'm going to tell you exactly how I'm going to look to get involved with this. We are in the trading through the Asian session at the moment. So we've got this sideways trend here, this Asian session range, right? I wouldn't touch this until London market kicks off tonight, right? So when does that happen? Well, it's 3 a.m. New York time. So let's just mark up the London Open. Do that. London Open, 3 a.m. I'm really keen to see how this trades into the London Open. I'm just going to pull that through. Okay, let's just mark up the most recent price action. We'll take that. And depending on how this thing unfolds during the Asian session into this time over here, will determine a lot of things. But you want to look at, we know that this is range bound, it's trading at the base of the range. So a potential target is going to be the high of this price swing. Looking at this high to, well, that'll do, to the low. This price swing to the low. Okay, it's hitting this support zone. Now, the thing with this is that there's a ton of liquidity. See these lows over here? See this double bottom? That's interesting. Let's grab that. What I would be looking out for would be this double bottom gets taken out. Let's just call that a liquidity pool under here, right? There it is. Okay, so this sell stop sitting under here. You know, I would say a lot of people would be looking to buy at the moment. A lot of traders would be bullish. And so there's going to be an accumulation of liquidity like sell stop orders under here that are a target. We've got a double bottom here. Okay, always look for these relative equal highs or lows, because the market is going to look to take out the liquidity under there, right? So if this is a target that we're looking at, I want to see price action, you know, do whatever it does. You might see it fake out first, and then I want to see it trade down into the London Open and then displace up. It builds more liquidity here. Okay, so this is planning a potential buy only if this shapes up. If it doesn't shape up, then there's no trade. So I'm looking at this range. I want to see a bit of a fake out, and that would entice more stop losses. Buyers would FOMO in, and then I want to see it, the London Open, I want to see it trade down into the London Open and rotate right there. And then the next thing you want to look for is see this candle here. You want to see, look at this. Look at this low. See that range? See how it dips under before it displaces north? Right, the range displays, then hits the stops, and then displaces north, and then your opportunity comes when we get the pullback, retrace into the high. Break of market structure, you can look to get involved, right? That's the kind of plan with this, guys. And then your target will be this high up in here, the high of the previous range, the liquidity that's sitting up in there. What else can I say? Yeah, I mean that's it. That's range. That's trading the range, right? We're at the base of the range, and I'm looking for the buy. Can this thing turn around and go the other way? Absolutely, it can. So this idea is only valid if it plays out. And the thing that you're going to see then is, higher highs, higher lows kicking in, and now that's your cue to get involved. So watch it into the London Open. That could be an opportunity. And if this price action plays out in the opposite direction and you see it trending lower, I'd probably let it go. I would leave it alone. No? Just be careful, because it could very well turn around and do that, guys. But either way, it's going to trend higher highs, higher lows, or lower highs, lower lows, and that's when you look to get involved. And it's got to be around this time frame. What else can I say? If this thing starts trending with a vengeance before the London Open, I wouldn't touch it until the New York Open. If it's trading sideways into the London Open, there's a potential trade. If it starts trending with a vengeance prior to the London Open, don't touch it. Come back at the New York Open and see what opportunity is in front of you there. And it'll either be the low or the higher range of the range, and then you could trade it, as I mentioned. Anyway, I don't want to ramble on. Guys, look, your thoughts matter. Definitely comment. I would love to hear your opinions. We learn a lot from each other when we share comments. That's my take on the Aussie dollar pair at the moment. It's just a scalp. Friday, I don't like trading Friday. Be careful. It's a really dangerous time to be trading. The markets will tend to, smart money will tend to push the markets in the opposite direction to hunt stops in a big way on Fridays, right? So this could trend in either direction. Setup's there, it's there. If it's not there, then leave it alone. Guys, hope you have a great day, safe trading, and we'll see you in the next one.